So November 2017 is where we begin. Question 1A. Question 1A says, Tripa Limited is a company that specializes in the production of umbrellas. For the year ending that 1st of December 2018, the company is planning to produce special promotional umbrellas branded Jupiter. Tripa Limited wishes to determine the optimal number of umbrellas that should be produced. Additional information is that if all the umbrellas are sold within the year 2018, they would be sold at shillings 900 each. If the company is unable to sell all the umbrellas within the year 2018, they would be sold in the following year at shillings 300 per umbrella. The production cost per umbrella amounts to shillings 400. The demand for the umbrellas depends on the performance of the economy, which is highly unpredictable. The following are the possible states of economy. So we have that. Tripa Limited has to decide to produce the umbrellas at one of the states of the economy in order to match forecast demand. The opportunity cost of not selling an umbrella that is demanded is shillings 100. So you are told to construct a payoff table showing all the possible outcomes. Advise the management of Tripa Limited on the optimal level of production based on the expected value, max and max min criteria. So that question is on what we call SIGO stage decisions. Is on SIGO stage decisions. SIGO stage decisions. And in making these decisions, we begin with the option. We begin with the option, and option will be the production. Then we go to outcomes. We go to outcomes, that is the demand. Then we will have units sold in 2018. That is the year of production. 2018 times 900 shillings plus units sold in 2019 times the selling price in 2019 is 300. Then you minus units produced, multiplied by the production costs per unit according to information 3 is 400 minus shortage units multiplied by every unit out of stock is costing us 100 shillings. It's costing us 100 shillings. And when you do that, this gives us the payoff. That gives us the payoff. So ukifika hapo, you tell me finished. Aika and Eva Mwangi, good morning. Good morning, Aika. Yes, Eva. Kisha maliza kuchora hiyo table, niambie finished. Yes, Timothy, Aika. Yes, Eva. So let us begin. And we can have our figures in thousands here. And the first option is you decide to produce 500 umbrellas. If you have decided 500 umbrellas, demand can turn to be 500. So if demand turns to be 500, then you sell everything in 2018 at 900. Then there is nothing that remains to be sold the following year at 300. Then you have produced 500, each at 400. And no one has missed what they wanted at a cost of 100. So let's work out that and set the answer. Tuseme 500 times 900 minus 500 times 400. Set your answer to that. Yeah, 250,000. We have 250,000. Now you have produced 500. It is possible that demand is 350. Demand turns to be 350. So if it is 350, the units that you sell in the year 2018 will be 350 at 900, plus those that will remain, because you have produced 500, there is a balance of 150 that remains to be sold the following year at 300. And production is 500 at 400 shillings, minus no one has missed at a cost of 100. So work out that and set the answer. You say 350 times 900 plus 150 times 300 minus 500 times 400. Yes, Timothy, I can Eva, I also need your figures. This is 160,000. We go to the next, which is 300, where we have produced 500. Demand turns to be 300. So you will sell 300 in that year, each at 900, and the balance of 200 will be sold the following year at 300 shillings, and production is 500. Production is 500 at 400 shillings. No one has missed at a cost of 100. At a cost of 100. So this will be 300 times 900 plus 200 times 300 minus 500 times 400. Yes, Haika, good. 130,000. 130,000. That is the first case. Let's now try the next one of producing 350. If you produce 350 and 500 customers come, then that year you only sell 350 because that is what you have at 900, and there is nothing that remains to be sold the following year. There is nothing at 300, and production is 350 at 400. But now 150 customers will miss. 150 customers will go home without. So that gives us 350 times 900 minus 350 times 400 minus 150 times 100. What is the answer? Aika, good. I can see 160,000. 160,000. Now you have produced 350 and 350 customers come. So that year you sell 350 at 900. Nothing to be sold the following year. Nothing to be sold the following year. The units produced are 350 at 400. No one goes home without. We have 100. So 350 times 900 minus 350 times 400 is how much? Here's Aika. 175,000. 175,000. Then we have 300 here. So 300, you sell in that year 300 at 900. Then the remaining units of 50 to be sold the following year, each at 300. Minus we have produced 350 at 400. Minus no one goes home without at 100. No one goes home without. So this will be 300 times 900 plus 50 times 300 minus 350 times 400 is 145,000. Is 145,000. 145,000. Yes, Eva, good. Let's go to 300. You have produced 300. When you produce 300 and 500 customers come, then you are only able to sell 300 because that is the minute that you have. You multiply by 900. Nothing to be sold the following year at 300 shillings. Production is 300 at 400 shillings minus 0 at 100 because no one, sorry, not 0. 200 customers have missed. 200 customers have missed. 200 customers have missed. So it will be 300 times 900 minus 300 times 400 minus 200 times 100. The answer is how much? Is also required to as a production possibility curve. Waiting for the answer. Yes, IFA 130,000. Then we come and look at 350. 350, and you have produced 300. You only sell 300 at 900. And there is nothing that remains to be sold the following years at 300 minus 300 at 400 But in this case, 50 customers have gone home without times 100. So when you do that, we have 300 times 900 minus 300 times 400 minus 50 times 100. Yes, Pivarin, good. 145,000. Then you go to 300. Now 300, you have produced 300 at, so that is what now we said that here at 900 and nothing to sell the following year at 300. Production is 300 at 400. No one has missed at 100. So that becomes 300 times 900 minus 300 times 400 is 150,000. Is 150,000.
So our line baby would represent the production for the car. So if we have the production of the here.
Now from there, the next thing that you need to do
All the resources and devoted towards food production. All resources are devoted towards food production. Thereby, nothing for the production of goods. Thereby, nothing for the production of goods. Leaving nothing for the production of goods.
So we have the option, we have the outcome. So the options are, you produce 500,000 units, 350,000 units, 300,000 units, And here we have probability. Then here you have 500,000, 350 and 300,000. And remember, this is called payoffs table. Payoffs table. So we can have sharings in millions. Sharings in millions. We can have our sharings in millions. So that here I record 250, 160, 130, 160, 175, 145, 130, 145, 150. The probabilities are 0.3, 0.46, and 0.24. So if we have drawn that, now we make decisions based on the expected values. So we will have expected monetary value rule. Where we have the option of 500,000, 350,000, 300,000, and below that, we will offer the advice. So here we have the expected monetary value. The expected monetary value. So kwa here 500, it is 250 times 0.3 plus 160 times 0.46 plus 130 times 0.24. 0.24. So send me that answer. Send me that answer. Yes, IVA 179.8. We go to the next one, that is 160 times 0.3 plus 175 times 0.46 plus 145 times 0.24. Give me the answer. There's Aika, I can see your answer. Yes, Aika, Timothy, good. 163.3. Then this is 130 times 0.3 plus 145 times 0.46 plus 150 times 0.24. Yeah, good. I can see 141.7. So the advice is that we should always go for the highest, which happens to be this one. So that means we should produce, we will advise them to produce 500,000 units. You are making your decision on this rule. You go for the highest value. So we shall advise them. We shall advise them to go for that. The next one, tunaambiwa tutumie inaitwa Max rule. Max rule. Max rule. So here we have the option, and then we bring the maximum payoff. The maximum payoff. So the option is 500,000, 350,000, and 300,000. That is the option. Those are the options. The maximum ukipita kwa 500 is 250. Is 250. 350 we have 175. And 300 we have 150. We have 150. So this one says go for the maximum of the maximums. So the maximum of the maximums is this one. So once again, the advice that we shall offer to these guys is that they should produce 500,000 units. They should produce 500,000 units. 500,000 units. The last rule is max min. Max min rule we have the option here, and then the minimum payoff. The minimum payoff. So again, we have 500,000, 350,000, 300,000. So the minimum payoff for 500 is 130. For 350 is 145. 300 is 130. 130. And then the advice that we shall offer is that you are supposed to pick the maximum of the minimums. So the maximum of the minimums here is this one. So we will tell them to produce 350,000 units. 350,000 units. Something else that you can easily come across here, although it's not required in this question, is what we call value of information. Value of information. And remember, value of information, it can also be brought to you as the maximum amount to pay. We can ask you to tell them the maximum amount to pay for information. The maximum amount that you can pay for information is what we call value of information. So this one, value of information, is given as expected monetary value with information. Expected monetary value with information minus best expected monetary value without information. It is expected monetary value with information minus best expected monetary value without information. So now, this one that is called with information, the so-called with information, how you arrive at it is this way. Unakuja kwa hii table hii ya kawaida. For each outcome you pick the best. So hapa the best is 250 and the probability is 0.3. Plus, unakuja hapa, the best is 175 with a probability of 0.46. Plus, huyu, the best is 150 with a probability of 0.24. Then you minus kwa hizi EMVs that we had computed, ile tulikuwa tumechukua at the highest, which was 179.8. That is the one we call the best without information. So work out that and give me the answer. Yes, Eva, you are talking of 11.7. 11.7. Yeah, the same thing to do with Hiker. Good. So that is the maximum amount that you'll be willing to pay, or you should pay to be guided in that. Let's go to part B of that question. Part B says, Solid Limited produces and sells 3 products, A, B, C. Solid Limited has contract supply products A and B, which will utilize all the specific materials that are available to make these 2 products during the next period. The revenue that these contracts will generate are the contribution to sales ratios of product A and B are as follows. We are given that additional information is that product C will generate a contribution to sales ratio of that amount. The total fixed cost of Solid Limited are 5.5 million during the next period. The management have budgeted to earn a profit of shillings 1 million. You are required to get the revenue that needs to be generated from product C for Solid Limited to achieve the budgeted profits. So that's question 1B. Is coming from CVP analysis. It's coming from CVP analysis. And what we require, first of all, you can see they are giving us CS ratio. CS ratio is what in our notes we call contribution margin ratio. And when we called it so, we said it is given as contribution, you divide by the price. You divide by the price. That is the first thing to note. divided by the price. And remember, you can either have it on a per unit basis or for all. The answer will be the same. So the question is asking about the profits. Now we know that if you want to get contribution, you minus the fixed costs. That will give you the net profits. If you are to get the contribution, you less the fixed costs, that will give you the net profits. So then how do we get the contribution? So now, contribution will be equal to CS ratio multiplied by the price. Multiplied by the price. That is how you get the contribution. And price can also be the revenue. So you say let RC to represent total revenue of product C. Present total revenue of product C. Then, if you get A, it is 15% of 10 million. So 15% of 10 million plus 10% of 20 million plus C has 25%. So 25% of RC. Then you minus the fixed costs, which we are told is 5.5 million. And this should allow us to have a profit of 1 million. So on solving, give me RC. So and tell me RC is how many millions? I'm waiting for the answer. The revenue of C is how much?
Remember, it is not the government tax policy concerning products and household consumption. It means the government wants to tax households in a way to increase its tax revenues. So, elasticity of demand will be found by identifying particular households.
What is the answer?
Whose demand is inelastic. If the demand for a particular product is inelastic, then an increase.
Yes, Haika, 12 million.
That means the government objects to a higher tax rate.
Yeah, that is the answer, 12 million. So that is the answer, 12 million. Yes, Timothy. Good. Question 2B, we are told to use that data and develop an equation of Hiro and least squares. So let's go to question 2B. Question 2B is on what we call cost forecasting methods. Is on what we call cost forecasting methods. And the first one, we are told to use the Hiro method. We are told to use the Hiro method. We are told to use Hiro method. Hiro method. And you recall that when you're using Hiro method, we normally say A plus BX is equal to 1. A plus BX is equal to Y. A plus BX is equal to Y. So you run through the values of X, who are the machine hours, and you identify the highest. Tell me how many, or what is the highest value of hours? The highest that you can see. The highest that you are able to see is how many hours? Yes, Timothy, 48. So we have 48, sorry, we have this way. So this will be A plus 48B, and the cost is 680. Then you take the smallest number is 26. So it is A plus 26B, and the cost is 500. And the cost is 500. And remember, when you are in high row methods, we only select the units or the X. You don't go selecting the costs. Costs are guided by what you have picked here. The other thing that has come out here is that the 26, they are 2. But the beauty here is that they have the same cost. But if they have different costs, you are free now to choose which one to take. You take either, or just one of them, because they could even be more than 2. So now, subtracting, this becomes 22B being equal to an 80, and based on that, if you say 180 divide by 22, you will get 8.18. Na tulikuwa tumeulizwa tuseme nini? Estimate the fixed and the variable elements of fuel costs. So this one is the variable cost. Is the variable cost per machine hour. Per machine hour. Is the variable cost per machine hour. Then you proceed here and say A plus 48 times 8.18 is equal to 680. So based on that, I will say 680 minus 48 times 8.18. And the answer is 287.36. And this is the fixed cost. Thus, Y is 287.36 plus 8.18x. Yeah, that is the high row method. The next one is the least squares method. Least squares method. So when you are told to talk about least squares method,
we must not be confused.
least squares method,
Because our Bible
is that y is equal to a plus bx, where b is given as n sum of xy minus sum of x sum of y, you divide by n sum of x square minus sum of x, you square that, and then a is sum of y minus b sum of x, you divide by n. Divide by n. So from there, you proceed now and seek to have the analysis table where we have the values of x there. 34, 30, 34, 34, 30, 34, 39, 42, 32, 26, 26. Yani kama sikiziani inatosha. Hiyo space imekataa hapo. So I will come here. So we have the values of x here, 34, 30, 34. That 9, 42, 32, 26, 31, 35, 43, and 48, so that we shall have the total down here. The total, if you quickly get it, is 34 plus 30 plus 34 plus 39 plus 42 plus 32 plus 26 plus 26 plus 31 plus 35 plus 43 plus 48 is 420. 420, that is the total of x. We got y now. Y is 640, 620, 640, 620, 620, 590, 505, 30, 500, 500, 530, 550, 580, and 680. You quickly add 640 plus 620 plus 590 plus 500 plus 530 plus 500 plus 530 plus 550 plus 580 plus 680 is 68, 40. 68, 40. The next column that you require is x squared. So 34 square is 1156. That square is 900. 1156. That the 9 squared is 1521. 42 square is 1764. That 2 square is 1024. 26 square is 676. 676. That 1 square is 961. That 5 square is 1225. 43 is 1849. 48 square is 2304 plus 1849 plus 1225 plus 961 plus 676 plus 676 plus 1024 plus 1764 plus 1521 plus 1156 plus 900 plus 1156. This is 15,212. 15,212. The last column you require is called XY. It's called XY. So 34 times 640 is 21,760. 30 times 620 is 18,600. 34 times 620 is, or times 620 is 21,080. 39 times 590 is 23,010. 42 times 500 is 21,000. That 2 times 530 is 16,960. 26 times 500 is 13,000. 13,000 also. That 1 times 530 is 16,430. That 5 times 550 is 19,250. 43 times 580 is 24,940. 48 times 680 is that 2,640 plus 24,940 plus 19,250 plus 16,430 plus 13,000 times 2 plus 16,960 plus 21,000 plus 23,010 plus 21,080 plus 18,600 plus 21,760. I record 241,670. So those are the answers. If you disagree with any, you let me quickly know. If you disagree with any of those, you let me quickly know about it. Ukishatengeneza hiyo table na umekubaliana with my figures, you now substitute and say B is N. N is 12 times sum of XY, which is 241,670 minus 420 times 6840. Then we have 12 times sum of X squared, 15 to 12 minus 420 times 420. So this one times 12 minus 420 times 6840 equals, divide by bracket 12 times 15 212 minus 420 times 420. I'm getting 4.43 shillings. 4.43. And if you're in agreement, this is the variable cost per machine hour. The variable costs per machine hour. Then the value of A. Value of A is given as sum of 1, which is 6840 minus 4.43 times sum of X, which is 420. You divide by 12. That is shillings. I multiply this by 420, then 6840 minus the answer is divide by 12. Then I should talk of 414.82, and this is the fixed cost. So that's Y should be 414.82 plus 4.43x. If you are in agreement with those results, Adika agreed.
two, we give advisory, training, and support services. Advisory.
Yeah, I can see we are in agreement. That is good. So the next thing tulikuwa tunaulizwa kwa hiyo swali is to interpret the 0.25. That is what we call coefficient of determination. So these coefficients of determination, that is R squared, R squared, it is 25%. So 25% of fuel expense is explained or is brought about. When we say explained, we also mean brought about by machine hours. That's the meaning of that value. That in that case, 25% of okay, so we are okay. I can see I only have 10 minutes. I'm wondering what to do with them, because the next question I am not able to finish within 10 minutes. So I will skip to question 4B. 4B, I think we can finish within the 10 minutes. So let's go to question 4B. 4B, the next lesson, we will go back to the others. 4B is easier to finish now. The Rovers group comprises two companies, namely WZ, all that. And then the financial results for the two companies are as given. So you are told to compute those measures. You are told to compute those measures. So let's start with the return on capital employed. Return on capital employed. Return on capital employed. Return on capital employed. Now, return on capital employed We will have details here. And the formula is the income you divide by a capital employed multiplied by 100, and this is the one that we normally call ROCE. And then, because we are told to evaluate performance, we can rank them. We can rank. We can rank something like that. So if we start with the design division, the income is the profit, which is 6,000. You divide this by the capital employed, 23,540. You multiply by 100%. Give me that answer. Give me that answer quickly. Hii tutamaliza na hiyo speed kweli. Yes, IVA 25.49%. 25.49%. Let us go to the next one wenye anaitwa gearbox division. Gearbox division. So gearbox division 3875. You divide by the capital employed of that 320. Multiply by 100. Multiplied by 100. Yes, Timothy Aika, good. Give me the next one. 25. 12% according to Timothy. Aina decimals. Let's use 2 decimals now that the first one has 2. If it has, not unless it is very exact. Yeah, 11.89%. 11.89%. And then huyu mwingine anaitwa Z Limited. Z Limited. The profit is 70.10. You divide by 82,975. Multiply by 100. Multiply by 100. $8.45. So 8.45%. So rank, this is number 1, this is number 2, and this is number 3. That is about ranks. Huyo mwingine tunaulizwa asset turnover. Asset turnover. Get the helper. So asset turnover. So here I will have details. And the asset turnover, how do you get asset turnover? Asset turnover is revenue you divide by assets. You divide by assets. That is the asset turnover. And then you run. Then you run. So if we start with the design division, the revenue, as you can see up there, is 14,300. Asset is the capital. So natumia hii capital to 23,540. So utasema 14,300 you divide by 23,540. You get 0.61. Haya, ukibie kwa gearbox. Gearbox division. So gearbox division, we have 25,535. 535. Capital is that 2,320. So 25,535 you divide by that 2,320. You have 0.79. 0.79. Then we have Z Limited. Z Limited is the revenue is 15,560. 15,560. Na capital ni 82,975. So 15,560 you divide by 82,975 is 0.19. 0.19. So in terms of ranking, this is number 1, this is number 2, and that is number 3. In terms of ranking. And the last one is operating profit margin. Operating profit margin. So here we have again details. So these will be profits. You divide by sales or revenue. You can even multiply by 100. That gives you the margin. And then you will have the rank. And then you will have the rank. So we start with the design. Design division. This will be gearbox division. And this will be Z limited. So the profit, this is 6,000 here. This is 38.75. And this is 70.10. Revenue is 14,300 here. 25,535. And 15,560. So you multiply by 100 or you give it as a ratio, whichever you prefer. Multiply by 100. So 6,000 divided by 14,300 times 100. I will talk of 41.96%. 38.75 divided by 25. 535 times 100. I will talk of 15.18%. 7010 plus or divide by 15,560 times 100 is 45.05%. 05%. So in terms of ranking, this is number 1, this is number 3, and this is number 2. So we call it a day at that juncture. Once you finish copying, let me know. So that you can add the class. So if I have finished, yes. So to patana in the next lesson now, God willing. I have finished. Timothy. So thank you so much. Have a nice weekend. Patane on Monday.